Hey, this is Matt from InvestiQuant. Today is Friday, December 4th, 2020, and today was the non-farm payrolls report. It was a fairly quiet reaction to the report this morning, but once the markets opened, the markets had a small gap that pushed higher initially off the open and has held on to those gains throughout the session. So we opened right down near the lows of the session. We're currently trading up in the upper end of the ranges this afternoon as we are getting closer to the end of the session. But what I want to do is take a look at this type of price action that we're seeing, where we're forming a pretty strong green candle as we approach the close on this non-farm payrolls report day. So let me set this up in Discover, and we're going to be looking at all four instruments and using a time-based entry of 3 p.m. Eastern Time. It'll be set up as a long that exits at the close, which is 4:15 p.m. Eastern Time. And the pattern that we're going to be looking at is going to be based on the intraday price action. So we've got this strong action taking place where we opened near the lows. So I'm going to go to this open versus the intraday range section. And I'm going to say that the open is in the bottom 25% of the intraday range. And then next, I'm going to go to the intraday close versus intraday range. And that's going to allow me to put the price where it's at relative to its range at the time of the entry. And we're going to be using a 3 p.m. entry here. So I'm going to assume at 3 p.m. we are in the top half of the intraday range. Of course, I don't know if that is true, or I don't know if that is going to be true, but it is currently true at the time of this recording. So I'm going to use, it's trading in the top half of its range at 3 p.m. It opened in the bottom 25% of its range. So it's forming a green candlestick here. Then I'm going to go into the indicators. I'm going to put us in a similar bullish environment where we are above short-term moving average, 10-day simple moving average, as well as a longer-term moving average, the 200-day simple moving average. Lastly, I'm going to go into the market events and say that today was a non-farm payrolls report. So that'll complete the pattern that we're going to look at here, and then I'm going to click View Results. And here we go. So these are the results of going long at 3 p.m. Eastern Time, exiting at the close, 4:15 p.m. Eastern Time, on non-farm payrolls report day in a bullish market environment, which is defined as being above a 10 and 200-day simple moving average, when the intraday price action is strong. And I'm defining that strong intraday price action as the open being in the bottom 25% of the intraday range, and the 3 p.m. price being in the top half of the intraday range. And historically, that has only happened 20 times in the S&P. It's happened 23 times in the NASDAQ. It's happened 20 times in the Dow and 23 in the Russell. So very similar sample sizes here, a little bit over 85 combined between all four. And this data is going back to 2003. And if we look at the win rates on these, all of them leaning a little bit to the long side. So like the study this morning showed, this non-farm payrolls report showing a bit of a lean to the long side at all-time highs. We're also seeing it with this price action as well in the bullish environment, where we've got a 65% historical win rate there in the S&P. It's 61% in the NASDAQ, 60% in the Dow, and 57% in the Russell. So all of these at least 55% or better. S&P a little bit stronger than the others. Again, not a huge sample size, but they are all in agreement and favoring the upside as far as win rates go with this pattern. If we take a quick look, average win, average loss, looks like the average loss is larger than the average win in the S&P. The others look fairly similar in size. NASDAQ looks fairly similar in size, as does the Dow and the Russell. So looks like the S&P just catching an outlier or something, probably making that much larger than the others. But historically, win rates have favored the upside a little bit on the 20 or so samples that we have for each of the instruments. So hopefully you found that helpful. Good luck the rest of the day if you're still trading, and we will see you next week.